Hey, moneymakers, welcome to another episode of Taking Stock. Almost at live, but we're not live tonight. It's actually Independence Day in Jamaica, so we decided we're going to do things a little bit differently today and pre-record the show. Happy Independence Day to everybody in Jamaica and all our diaspora viewers as well, wherever you are in the world. I know that you're still waving your Jamaican flag, especially in the spirit of the Olympics and all the excitement that is going on right now. My name is Kalila Reynolds, and we have another exciting show for you, just as usual, especially given the spirit that we're all collectively in right now. Dr. Marlene Street Forrest has been a trailblazer at the Jamaica Stock Exchange, and she is officially retiring at the end of the year. Some of you might have been surprised, but guess what? We have her here tonight to, get some of her reflections on her stellar career leading the JSC. But before we go into that, I want to remind you to hit the like button, subscribe to this channel, and tell a friend that Taking Stock is streaming. And let me know in the comments, in the chat, what part of Jamaica and what part of the world you are joining us from. Now, come on, let's get this money.
On this episode of Taking Stock,
the creation of the junior market is one that I'm extremely proud of. And the reason for this is the opportunity that it affords small and medium-sized companies to access capital.
After over 2 decades at the Jamaica Stock Exchange, Dr. Marlene Street Forrest is set to retire as Managing Director. How does she grade her performance at the helm of the company? And what's her next big move? We'll discuss on this special edition of Taking Stock. Plus, the analysts weigh in on the latest market developments. What are the implications of interest rate cuts on the stock market? And why is MPC Caribbean Clean Energy Limited reorganizing its company? We'll discuss.
Here's what's hot, brought to you by JMMB Group, your best interest at heart.
R.A. Williams' initial public offering is now closed. The offer was oversubscribed and closed on July 31. The pharmaceutical distribution company reportedly raised over 420 million Jamaican dollars, 20 million more than its $400 million target. The company's basis of allotment is expected to be published this week, followed by its listing on the junior market. Almost $1 trillion was processed through automated banking machines, ABMs, in 2023. According to the Planning Institute of Jamaica's Economic and Social Survey, the value of Jamaican dollar ABM transactions climbed to $774 billion last year. That's 6% more than in 2022. However, the volume of transactions dropped 9%. The survey also revealed that the network of ABMs installed by financial institutions increased by 5% to 866 across the island. The Jamaica Stock Exchange has officially launched the Jamaica Green Social Sustainability and Sustainability-Linked Bond Guide. The guide provides a framework for investors to navigate the evolving green financing landscape. Green financing is a loan or investment that supports environmentally friendly activities. Finance Minister Dr. Nigel Clark says billions of dollars are available in the global financial markets to finance green projects. Fears of a U.S. recession were reignited last week, triggering a global market meltdown on Monday. U.S. stocks fell sharply as part of a global market sell-off centered around U.S. recession fears. Japan's Nikkei index fell 12%, its worst single-day performance since the 1987 Black Monday crash for Wall Street. Meanwhile, the Dow Jones, Nasdaq, and S&P 500 were all down around 2% mid-morning. Economists say a disappointing jobs report for July was the main culprit for Monday's meltdown. Investors were also reportedly concerned about the Federal Reserve's decision to keep interest rates at a 2-decade high.
So you guys are always up in my DMs asking if I do mentorship or if you can get my advice. Well, good news, I've finally created a mentorship program just for you. It's called Money Mentorship, and it's the first Monday of every month inside the Money Mission community. Now, let me tell you from now, it's not free. All right, because if it was free, too many people would show up and I wouldn't be able to give you the one-on-one personalized attention that I know you really need. But I did make it affordable. The link is in the description or the comments for more information. Let's get this money.
Let's get this money.
Welcome back. Welcome back. And I see a lot of you are joining us as usual. Keep those comments coming in the chat. Well, Dr. Marlene Street Forrest's tenure has led us through quite an era at the Jamaica Stock Exchange. We're talking about Jamaica being the #1 performing exchange. 2 years, 2015 and 2018, we're talking about introducing NASDAQ technology. We're talking about things like short selling coming to the market and so much more. And so it is my pleasure to introduce her today as our guest, our Independence Day guest. Welcome, Dr. Street Forrest.
Thank you, Khalil. It's always a pleasure to be with you, to join you.
So how long have you been at the JSE?
Just about 24 years.
24 years.
Yes, started in September 2020.
You know, young people don't stay at anywhere more than 2-3 years though. You know, these long careers. Wow, I really have to give it to you, to take my hat off to you. What was your first position there and what attracted you to the role?
My first position was that of Deputy General Manager and in charge of finance. And then I moved on to being the General Manager for the Jamaica Central Securities Depository, which is a subsidiary of the Jamaica Stock Exchange, and then on to the General Manager of the Stock Exchange, and then on to the Managing Director. The role of the Deputy General Manager, what attracted me? Well, it was really in charge of finance. And remember now, my career overall has been in accounting and finance. So obviously that would have initially attracted me to apply for the position as the Deputy General Manager in charge of finance. And obviously the entire area of the financial sector also played a role in my applying for the position and being accepted.
So you came in already at a senior level right after the FinStack era of the 90s. You were there 2020, smack right after FinStack. What were you doing before going to the JSE?
2002. 2000, not 2020, 2000.
Ah, 2002.
Yes.
Sorry.
2000, yes. Because it's 24 years, 2000.
Right.
September 2000, yes.
2000, my bad. Yes, that's what I meant to say.
Yeah. Your question?
Right. So you came in right after the FinStack era, 2000. FinStack was the 90s. How did that affect your move to the JSE? How did that impact your thinking around that time?
It didn't really, impact my thinking, because the fact is that markets will have its ups and downs, and I never shy away from any job at all. I always believe that coming in, I can play a role, and I seek to see where there are gaps and what role I can play. So the fact that the market was down probably also energized me in terms of what it is that I could possibly contribute. And the word is contribute. You must see yourself contributing to an organization before you even consider joining that organization.
Now, today, 24 years later, the JSE is one of the it's definitely the largest stock market in the English-speaking Caribbean, and possibly one of the largest in the entire Caribbean. What are the things that you think led to that?
You have to look at it on different levels. One is the infrastructure that one would have created. Two, and most importantly, market education. Three, the building that confidence in the market. Sorry, whether it is from the investor side or potential listing. Then also you have to look at the external, which is the economy, and a lot has been done to ensure that we are on a good path in terms of Jamaica's economy. So all of these things play a role. And when I talk about the infrastructure, you are talking about the broker community, you are talking about others who would see the necessity to build a vibrant capital market, despite the fact that there was some fallout, the necessity to build a vibrant capital market. And it is the collective force that would have seen the stock exchange move from one position to the rise in the creation of new markets, etc. It's a collective.
So you have been there through 3 very significant periods. So you started post FinSac. You've been there 2008 recession, 2009. You've been there through COVID-19, 2020, 2021. Which of those periods would you say was the most challenging?
Each period had its degree of challenges, and I would say that this last period here, post COVID, has had its fair share of challenges because of the long extended bear market that we're having. It has its challenges, but the fact is that what we are certain about is that the stock market / the stock exchange is resilient. We are comfortable that we have had more than 230 new investors to the market, which are well trained, understand the importance of the capital market, understand where they are or can be in the process of wealth creation. And so there is that body that will propel the market even after this.
So wow, so COVID was even more difficult than the 2008 recession.
Yes, I would say that it was, yes.
Wow, yeah, it absolutely had a dramatic impact. I remember this JSE falling like 30% in March, right when COVID-19, the restrictions were announced and everything. That entire period was extremely difficult. And then you had not even sure, we're in 2024, yes. 2023, January, SSL.
Yes.
And the investor fallout that resulted. What do you think could have been done differently leading up to SSL?
Well, SSL fallout, let us look at it. It is a matter of confidence, market confidence. Persons are uncertain as to what will happen. And so possibly overall, there could be greater communication. And I still think that even at this point, there can be greater communication with the market so that persons are able to get back to normalcy than it took a long time.
Right. Greater communication absolutely is needed, but what's preventing that at this time? And what type of communication would you recommend?
Well, persons want to know what to do after an institution seems to be in trouble. What do I know about my investments? Whether it is investments in the stock market, and I hasten to say here, as it relates to the stock market investments, because of how we are structured, the investments that are there under a stockbroker, those are secure. But people want to know how quickly I can take part, I can liquidate those investments or transfer those investments to another broker. And so when this takes time, obviously it means that those investors are not able to invest in the market, and the market feeds on activities. So even that constrains the market.
Are the regulations and the regulators strong enough?
I believe that from the standpoint, let me answer from the standpoint of the Jamaica Stock Exchange. We do have a robust regulatory framework in the Regulatory and Market Oversight Division. And we constantly, monthly actually, look at each member dealer to see whether there are issues relating to that organization. These might not necessarily be reported immediately to the general public, obviously, because one would want to be examining and to speak with our ultimate regulator, which is the Financial Services Commission.
I feel like I haven't really answered the question. Are they strong enough?
Well, I can speak for the stock exchange. In everything, though, Kalila, when a problem hits, there's always an opportunity for one to look at how you can enhance that process, so that there is not a repetition, or that the process becomes better should there be something of the same nature. So robust regulation is there. Strengthening that regulation, obviously, is important. And you would have seen and heard the finance minister, who ultimately the FSC at this point reports to, have indicated several other measures that will be taken in respect to the regulation of persons within the financial sector.
Right, but it's a year and a half now. He mentioned that February 2023 is now July, August 2024, and it still hasn't been implemented.
Yes, and you know, Kalila, that it is best to get it right. In everything business, it is important that you get it right, especially in keeping with the fact that we have this fallout. You don't want to present to the market something that is half-baked. So yes, while you're dealing with the situation, you want to ensure that the regulatory framework that will be put in place, whether it is the Twin Peaks model or other models, that you get it right.
But given the fallout in investor confidence, and we've definitely seen the fallout in the performance of the stock market post SSL, yes, shouldn't this matter be treated with some urgency?
And I cannot say that it is not being treated with urgency. Just because you have not seen the full implementation or the implementation, it doesn't mean that it is not being treated with urgency. What it means is that there may be moving parts, there may be information and other things that are necessary to ensure that once it is implemented, the I's are dotted and the T's are crossed, which is what I have to say on this matter.
Yeah, I do notice that there has been increased vigilance on the JSE's part in terms of companies that haven't been submitting their audited financial statements on time. We've noticed quite a few companies being suspended in recent times. I don't recall seeing this happening before this year.
Because you are correct, because we did not have such a situation, and the situation, you have to look at it in all its parts. What we have which is a growing problem, is the fact that the audited, because when you examine, the major issue is with the audited financials statements, and you have an industry, the audit companies, that are being challenged somewhat in delivering those audited financial statements. And you have to look at it from the standpoint that there are more companies that are listed, there are greater requirements in respect to the international financial reporting standards, etc., which does cause the those audits to be much more detailed and take up more resources. So you have that. And you have the fact that there are more companies to audit. So on that side, you have that issue. What you would not have seen also is, sorry, that the companies themselves, where you have conglomerates, because of that too, that create, and we have more of those, that create also some delays. So there are a myriad of issues that are causing this problem that you see surface now. Post this period when you had the COVID, remember also that we gave, the stock exchange gave some allowance to companies to submit later than the 60 days if they chose that option, or 90 days with the fourth quarter submitted. So, you know, the issues are there and you have to get within the weeds and see where they are. What the stock exchange is doing is just really because these things are unfolding, looking at just how we can assist in ensuring that these companies remain and are compliant with the rules of the exchange.
So given what you just outlined and the difficulties, is it that we just don't have the resources in Jamaica to make sure that all companies are compliant and are able to file on time? And if that's the case, is it fair to hold to such a rigid standard?
That is one issue, and it is really not, I want to quickly add that this problem that is being experienced, it's not a Jamaica problem. This is a problem that is being faced by the region and internationally, where there is a dearth of auditors. There is the standards that have been increased for companies that operate, you know, and are listed on the exchanges. And so it is an international problem, and this is why we are looking at it closely. As you have asked, is this a standard that then listed companies can, is it fair to hold them to these standards? And so we are looking on all of that. We are looking on whether it is, you know, when you benchmark it against many of the other countries that have both the submission of these statements, and you have early warnings, etc., more interaction with investors. How do we now put all of that together to come to a point where, one, investors still get the information that they need on a timely basis, because that's very important to us. It's actually critical to us. And this is why years ago we changed, because the period between the last submission to the next one was 180 days. And that's a half a year. And which is why we tried. And I think that is one of the things that stimulated confidence in our market. The fact that the information was out pretty early. And so we want to keep that as a focus. But how can we, in keeping that as a focus, still ensure that there is something that is achievable for the companies that are listed, and also have within it the element of ensuring that investors get relative and relevant information on time.
You know, it's a very delicate balance that you have to strike, and a difficult decision as well, because on the one hand, you have the negative impact. I think of a company like Edufocal and how their share price plummeted after, you know, the suspension, because it's a reputational hit. And then on the other hand, you have, you know, the JSC last year being staunchly criticized over the iCreate situation, because they apparently were given, you know, a lot of leeway.
The iCreate was not given any lot of leeway that was not within the rules of the exchange. And one of the things that we want to
It took a
also
long time to suspend them, though, despite multiple late submissions.
they were suspended based on the rules of the exchange. I want to say that. What I also want to say within this discussion is we also urge our listed companies to start to do the necessaries of preparing their financial statements, just as if they were being audited at the end of each quarter, so that come the end of the year, their books and records are in such that the auditors, the level of scrutiny probably can be reduced as well.
I want to ask you this, Dr. Street Forrest. After over 2 decades at the JSE, what would you say is your proudest achievement to date? Because you're not gone yet. You still have 6 months.
Well,
5 months.
you know, as you say, proudest, but the fact is that there are many achievements that I could say at the point in time I was proud of, or I am proud of. The creation of the junior market is one that I'm extremely proud of. And the reason for this is the opportunity that it affords small and medium-sized companies to access capital, and the collaborative effect of partnering with the government in doing this. And I'm really heartened to see the growth of most of these companies by way of corporate governance, being able to raise those funds, being able to grow the business, their export, just the level of achievement that these companies have been able to meet. The other thing is not only that, but you see, because a market is issuer and a market is investor, and the investors, how they have, just taken to the junior market, taken to main market too, but in terms of their wealth creation. I'm also proud of the fact that, and possibly deep within me, I'm proud of the fact that the myth that it is only the rich that can participate in the equities market, I think that myth is certainly out the window now. And so the market is democratized. What we find now, we have over 230 investors in the market.
230,000.
230,000 investors in the market, which really converts to about 18% of the adult population of Jamaica investing in the market. And those who have not invested, they know about it. You can ask almost any man on the street now about stock market, and they are able to tell you something sensible. So that is, for me, probably, in terms of sustainability, in terms of reach, that would be two of the things that I think, we got right. We got market education, and we also got those small and medium-sized companies coming to market and preparing, Kalila, may I add, that every company almost now that you speak to, almost from the beginning, if you ask them in terms of their strategic plan,
They aspire to list.
yes, that is correct. What a beauty. What an absolute beauty. So that, people know where they can find access.
That is a truly amazing thing. So you listed some really great accomplishments, and there are no shortage of accomplishments. I was gonna mention that actually, Dr. Street Forrest, that just the change in the entrepreneurship environment, the enthusiasm, hearing young people talk about aspiring to list on the JSE for multiple reasons. It's a win-win-win situation because the investor gets debt-free money. The founder gets to cash out potentially, and locals get to participate in the building of Jamaican companies. The government gets more employment because businesses can expand, and then later on, well, they get also the payroll taxes. Later on, they get the GCT. They get the GCT now, plus later on, the income tax when the junior market 5 years and 10 years are expired, and so on and so forth. Just so many benefits. But with so many companies aspiring to list, what advice do you have for businesses that want to come to the JSE?
Well, the first thing is, you must always see what are some of the challenges that we have and that we see when companies want to come to market. And, as a company owner, etc., entrepreneur, you find that the concentration is getting that product or service out, to the detriment sometimes of the preparing good financial statements, ensuring that they're audited, just having that recorded business plan. And so we encourage people that the governance framework must be put in place. The board of directors, just meeting as I said, the plans, the business plan, and getting those records, be compliant with filing of your financials, your annual reports, etc. These are things that we encourage the potential listed companies to have. Don't be afraid and don't believe that you cannot list your company. Always have that as a goal, that I know the advantages of listing that company, that patient capital, the ability, as you have just said, to cash out, the ability to ensure that I can move from one generation to the other, the ability to have structured management, all of those, the continuous promotion of that business. And as I said before, good governance. So all of those things we want to encourage persons to have as part of the advantage and prepare for doing so.
How do you see the exchange evolving after you leave office? What's the future like for the
We
JSE?
have a competent team. As you would hear me say many, many times repeatedly, that there is success because of teamwork, because of a vision and everyone buying in to what we want to see as the exchange group, where we are involved in every transaction in some way. And that is why we have diversified the offerings of the exchange through our various subsidiaries, the Jamaica Central Securities Depository, the Jamaica JCSD Trustee Services. And then we also look at the social, because social is also important to business growth and development. And that is through the JSSE. So we have competent people.
No, that's not really the question that I'm asking. What do you see as the future of investing in Jamaica? I'm sure there are competent people. That's not really the question.
The future of investing in Jamaica?
The future of the JSE, what does that look like? Does it continue more of the same, or what are the developments that you
And
see
this is what I
making it
was saying to
successful?
you. It's never more of the same, right? It's always continued growth. So there is no doubt in my mind that there will be more products and services that will be offered because we have a strategic plan and we work that strategic plan. And so the JSE will continue to evolve, will continue to grow, will continue to benchmark itself against global exchanges, and also the subsidiaries will do the same.
Mm. And finally, Dr. Street Forrest, what's next for you? What's your next move?
Well, I keep my options open. I am, as you know, coming at the 65. I'm a young 65.
Oh, yes.
And so I keep my options open. There is more to contribute. And so we will take it as it comes.
Well, thank you so much. It's my pleasure. And I wish you all the best in these last few months of your tenure and beyond.
Thank you very much for having me, Kalila.
Okay, so to our viewers, it is time for our poll question of the evening. You heard it from the lady herself, what she thinks her most pressing and most impressive accomplishments have been. But I want to hear what you think. So here is our poll question, and you can take this poll over on Twitter or on YouTube. I think it's on Instagram as well. What do you think is the biggest achievement from Marlene Street Forrest's time at the Jamaica Stock Exchange? Here are your options. A, establishing the junior market. B, JSC ranked best stock exchange in the world for 2 years. C, record-breaking IPOs. Or D, other. Just leave a comment and let us know what you think the #1 accomplishment has been. So you guys did take the poll on Twitter and Instagram throughout the week as well, and we're still leaving it open for you. But let me tell you, or let me show you what our results so far have been. So far, we have establishing the junior market with 32%. JSC ranked best in the world twice, 44%. Record-breaking IPOs, 14%. And then we have other 9%. So far, you guys are saying those that are twice being ranked the best in the world, that was the #1 accomplishment for you, followed by the establishment of the junior market. So let's read some of your comments. Melrose says, honestly, she made the platform more visible and a lot more people knowing about the JSC. So that is one of the things that she highlighted in the interview herself. Superfly Coy says, all of the above. Agreed, Superfly. Miss Pris J.A. says, the launch of the junior market. Naturally Sunshine says, a lot of IPOs. Yep, it was IPO fever for some time there. A. Pierman says, all of the above. All right, so thank you so much for participating, and you can still take the poll on Twitter and on YouTube. So, have you signed up for the Money Mission community yet? If not, here's a look at what you may be missing. My advice to you would be to flip that now, because you already have 4 months. Flip it to 10% to emergency fund and 20% to investments. And let me tell you why. All right, so a couple reasons. One, if you were to, say, lose your job, right? You're not going to need 6 months now. You're not going to need the entire 6 months salary up front. And you have money in investments that you have 4 months solid, liquid cash that you can access right now. And then for the other 2 months, you already have money in the investments that you can draw from. All right, guys, remember to hit that like button and subscribe to this channel. Up next, we've got your market recap, and the analysts are standing by.
$128 stocks traded across the main and junior markets for the month. 54 made gains, 67 lost value, and 7 stayed the same. 1 billion shares changed hands on the Jamaican dollar market, valued at $7.3 billion. CPJ was July's most traded stock. It took up 46% of market volume, with 498 million shares changing hands. The stock lost 60% to open August at $8.89. Dollar was the month's second most traded stock. The stock lost 14 cents to open the new month at $2.74. And Wigton rounded out July's most traded. The stock lost 10 cents to start the new month at $1.01. Now let's see who had the biggest gains for the month. T-Tech was up almost 25% to open August at $2.58. First Rock Real Estate Investment USD had the second biggest jump of the month, closing at 5 cents US. And Iron Rock Insurance was July's third biggest gainer. The stock was up 19% to start August at $2.60. On the losing side now, CAC 2000 was last month's biggest loser. It lost 31% to open the new month at $2.06. Edufocal lost 14 cents to open August at 39 cents. And Accurate was down 24%, starting the new month at 48 cents. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 14 points, or 1% last month. Massey was the most traded stock of the month. It lost 42 cents to open August at $3.60 TT. The stock was also the month's biggest loser, down 10%. NCBFG was the biggest gain, up 9%. It opened the new month at $3 TT. Over in the US, the Dow Jones lost almost 2% in July, while the S&P 500 dipped 7% and the Nasdaq was down 12%. Motorists scored some wins at the pumps last month. The cost of 87 gas fell at 17 cents in July, while 90 was down 15 cents. Meanwhile, the cost of regular diesel lost $2.79, and low sulfur diesel lost $2.80. In foreign exchange, overall the Jamaican dollar lost 35 cents against the US dollar in July, closing the month at an average $157.19 to 1 US. The JMD also weakened against the Canadian dollar. The JMD also weakened against the pound and euro, with the pound losing $2.73 and the euro losing $4.74. Finally, on the crypto markets, Bitcoin prices fell 5% over the last 30 days, trading at $53,893 US on Monday, while Ethereum was down 19%, trading at $2,403 US on Monday.
Butterfly in the sky. What? I can go twice as high.
So if this is you, download my free e-guide right now, Financial Terms Made Simple. It's a list of 40 commonly used financial terms broken down into simple language. Because don't you just hate when you look up a word and it gives you an even bigger word as a definition? So this is not that. I've made it as easy as possible so you can just whip it out and use it as a quick reference when you hear a term that you don't really understand. That way you don't miss investment opportunities because you were too embarrassed to ask what a bond is or what an IPO is. The link is in the description. Let's get this money.
Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. It's time now for the analysts. Let me introduce our panel for this evening. We have to welcome back David Rose, business writer at the Jamaica Observer, and Clive Charlton, equity trader at JMMB, with us tonight. So Clive, let me start with you. You're looking at the implications of interest rate cuts on the stock market. And that has been something we've been talking about for quite some time. The BOJ recently announced that interest rate cuts are on the horizon. I imagine this is welcome news.
It is. It is. Yes, of course, interest rate is so critical to the economy. And sometimes these things happen, and that's when we learn about these, how these variables impact different aspects of the economy and our everyday life. Sometimes we try to tie these things in, and people don't see it, but something happens. Interest rate is really the cost of money. money is critical, or the movement of money. Money, we refer to it as capital, and it can be in the form of us investors buying shares, ownership in a company, or it can be in the form of us debt. We lending money to these companies, and lending is where interest rate comes in. They must pay us back the principal after a period of time, but also interest in between. Of course, if I'm going to give a company my money, that is buy shares in a particular company, what is the riskiness of that company? What return, if I were to put my money somewhere else, what kind of return would I get? So that's the what you call the opportunity cost of lending the company my money. So the company needs to compensate me for that risk or that alternative option that I have. And in this environment, this is where interest rate comes in. It compensates investors for whatever options they may have that is available to them to put their money in. And so right now it is very expensive, right? It is very expensive primarily because inflation was running, and there are reasons for inflation running. We spoke about COVID and the shutdown of the economy and shortage of supply. We spoke about the whole logistics issue of getting raw materials and moving goods globally. Then we became aware of a conflict between two countries, and we learned then that these two countries are significant and major producers of important global commodities, including food stock. So that added now to the inflationary drive in the global economy. To contain inflation, you have to restrict. People have money, they will run down goods. So you have to restrict the money supply, restrict the ability of persons and companies and entities to spend money to drive inflation further. And so BOJ increases interest rate. That will compel people to invest, compel them to save more, and restrict spending, and therefore pull back on demand somewhat. So it has its ultimate aim is to create a good effect, a long-term effect, a beneficial effect, but it has short-term implication. Because the cost of capital can mean that in the short term business get crunch. It means in the short term we have to pay more for everything, right? That's the implication of high interest rate environment. So the market is looking for a reduction in this interest rate, certainly.
But then just when we started anticipating that, boom, here comes Beryl and throwing a wrench in everything. So how is Beryl, I mean, it already happened, likely to impact, the reduction in inflation and the subsequent reduction in interest rates that we have been expecting? Yes.
Well, it may throw a spoke in the wheel of BOJ's, intention or to drive inflation down, because that creates two things. It creates a shortage. It creates a shortage in terms of goods and services, right? It hinders the movement of trafficking, movement of goods, people moving about, transportation and logistics. It impedes, it wiped out several banana farming. It shut down, destroyed some factories, business enterprise, shops. It destroyed people's home, which means that people, the ability of persons to go about their daily activity and produce is hindered. So it really, I think it exacerbated the problem of the high interest rate environment. BOJ now will have to, alongside other side of the economy, the fiscal side, but particularly BOJ will now have to have a further task of containing whatever fallout that Hurricane Beryl would have caused. That is a shortage of goods, a hike in prices, and we have already seen the hike in prices. So they really have to use special measure to contain that, but at the same time to keep production going. So they will not reduce interest rate. That is not on the agenda in the immediate future, but certainly they have used other monetary policy tool, for example, putting a little bit more liquidity in the system, in order to help producers and businesses to kind of keep the economic wheel grinding. But Hurricane Beryl would have caused a worse problem. It would have delayed or perhaps impact the level of decline in interest rate we would have wanted or would have expected if Beryl had not occurred.
So how much do you think this sets us back? Like how much time does it set us back?
Well, BOJ will do their studies, they'll do their analysis, they have crunched tens of thousands of data points, and over a period of time among businesses, Right now, they see the effect of inflation. They will look to see where inflation is. And then BOJ, alongside government regulation, the fiscal part may now implement measures to ease the shortage in, for example, food. We have heard of just about perhaps a few months ago, pre-Beryl, that some international agreement that we may have to allow the importation of some type of raw vegetable and fruits because of international WTO competition agreements. So that might be put forward on the burner in order to reduce the significant shortage of especially raw food, that is food that is not processed and canned or packaged in any way. We have monetary, and as you know, in terms of managing the money supply, as well as the government fiscal side, using regulations, taxes to drive that part of it, to increase the supply of that, to restrict inflation somewhat. If they are successful in doing that or managing it to some extent, then they had not indicated that by the end of the year they will reduce interest rate, but it may be soon. They may be able to do it, but do it at a lesser rate. They may at least be able to manage. Right now, I think the urgent situation is to contain inflation and to ease the suffering and to get the productive sector as well as people's regular lives moving again. That is critical now.
And people need to temper their expectations as well, because we were coming from record low interest rates, 0.5%. Yes. And then we've gone up to, I don't even know where it is at now, but it's
about 7% base rate. But in the retail, yes, but the productive sector is much higher.
But if our audience recalls, it didn't get to 0.5% overnight, you know.
Exactly.
So a period of quite a few years actually before it came down that much, because every time the BOJ would make an announcement, they would cut another 0.5%, another 0.5%. I think at one point the most aggressive they went was like 1%. 1 percentage point at a time. And so it's not going to go from 7% back down to 0.5 at the next policy announcement.
No, that wouldn't happen. That's too much of a shock to the economy. That would not happen. As well as our domestic economy and monetary policy is also dependent on what happens in the global space, particularly our major trading partner, particularly the United States, which is our major trading partner, yes, where much of our remittance comes from, and much of our trading, tourism, that is a puller, or, you know, produces a lot, employs a lot of our people, as well as generates a lot of foreign exchange. So much of our move is really dependent on where that is. If interest rate is high, we don't want to move ahead in lowering interest rate, because we don't want capital flight. If interest rate is higher there, remember, note, interestingly, that between 42 and 47% of all savings in the country, every single dollar of any currency saved in this country is US dollars or denominated in a foreign currency. That is people holding US
that much?
Yes, GBP, Canadian, yes, right.
Wow.
So it means that easily people can transfer hard-earned hard currency capital outside of the country's interest rate is favorable in another jurisdiction. So we really have to manage that process. And it's highly unlikely inflation will come back down to the 1 or below 1% anytime soon, in the next year and a half or so. But it will come down sufficiently, though, that we can get the productive gears moving again. Interestingly, I believe even at this rate where it is now, if you look at the performance of the market, several companies are still doing quite well. They are growing. Yes, inflation. Yes, their cost of capital is more expensive, but they are driving business. They are building out facility. They're expanding output. They are employing more people, especially in the retail distributive sector, because where we're coming from 20, 30 years ago, interest rate in the double digits. Even at this stage, they're still, the balance sheet, the capital holding of many companies are still fairly sufficient and stable and sufficient. So they're able to, you know, and even though capital is more expensive, capital is still out there. You can still access capital. So I think that adds some flavor to the economy. So I don't see us moving too quickly. We would not want to. We want to move slowly and steadily and maintain control, but I don't see going back down to where it was in prior periods.
Well, for the past several months, we've been looking to the United States, like you mentioned, to give the signal, looking to the Fed. Should the BOJ just preempt that at this point?
No, we're highly unlikely we will. US is a strong economy. It's the what we should say. There's a term. It's this. Well, I can't remember the particular term, but of last resort. Even when the US economy is doing poorly, investment capital floods to that country, because if the US is not doing well and the global economy is not doing well, people feel safer in an economy that they believe is strong, is sturdy, has good regulatory mechanism, has economy that the support mechanism to spring back the economy. So people are still safe there. So we would not want to preempt them, and drive interest rate up suddenly, spike inflation, especially when we are quite dependent on them. We import a lot of our raw material, even consumer goods, from that country. We would not want to preempt them. We're not in a position really to preempt them.
All right. Thank you so much, Clive, for that take. Always appreciate your input on the program. Let me reintroduce David Rose. Welcome back, David.
Good night, Kalila.
All right. So tonight we're talking about MPC, Caribbean Clean Energy. I remember when this company listed. I think this was my first interview on a stock market listing back in like 2019. And now they are reorganizing. What's the deal here? What's going on?
So just before we get on to that point, Kalila, Richard Biles, the central bank governor, had addressed Parliament's Standing Finance Committee to say that, it's unlikely that we're going to see a reduction back to 0.5% in the near future. So that person who are watching the program, should take that into account. So it sounds great that, everybody's gung-ho to see 0.5% again, but we're in a different framework right now. So not likely to see that 0.5% return. And even for July 30 and 31st being the day the U.S. Federal Reserve announces its policy decision, persons are still not anticipating, a cut for that period. Like you're going to see it come probably in September, which is the last time that the cut can be done before the U.S. National election. So that's just a quick point on respect to interest rates. Then, with respect to MPC, MPC is not what one would call a simple run-of-the-mill company that everybody understands. So let's break it down a little bit, right? So MPC, Caribbean Clean Energy Limited, is a listed company, right? That company owns about 85% of a Cayman-based fund called MPC Caribbean Clean Energy Fund LLC. That fund in the Cayman Islands is what directly owns the renewable energy assets. So when you bought into the IPO, MPC would have invested those funds into the Cayman structure. The Cayman structure took those funds and invested it directly into the renewable energy assets. However, it's not appearing to be the most favorable structure. So what has happened now is that last year at the shareholder meeting, they would have approved, or shareholders would have approved at the time, a reorganization. So what is expected to take place going forward is that these assets will be moved from the Cayman business and moved directly into the listed company, which is based in Barbados, right? So instead of MPC Caribbean Clean Energy Limited, the listed company only reporting the fair value gain or loss on the investment value of the fund, what instead would happen is that whatever direct operations take place in these renewable energy assets will show up directly on the profit and loss statement or income statement.
Are there any benefits for shareholders from this change?
Massive. So let's put it in a simpler perspective, right? So as it currently stands, we know MPC is involved with Paradise Park in Westmoreland, right? The MPC Caribbean Clean Energy Fund owns 49% of that asset based in the Westmoreland, right? Then you have the other assets, such as for example, the one based in El Salvador, that's a joint venture with Ansa Macal. They have another investment in Monte Plata, which is a solar farm in Dominican Republic. And I can't remember the last asset is somewhere in the Latin American region, but basically investors will now see some derived value showing up on the income statement. They'll be able to better value the future cash flows and actual potential returns to the company and potential growth opportunities. Because what happens right now, Kalila, is that MPC Chemical Energy Fund LLC in the Cayman Islands, it gives a dividend once every couple of years to MPC Chemical Energy Limited, listed company, and that is what it uses to keep itself alive, in a sense, over the following periods. So MPC has only paid one dividend since listing, and that was in 2019. Now, shareholders are just there holding onto the stock that they don't have a good or sufficient way to value or see what's happening under the shell of the business own activity. And then on top of that, the Cayman structure carry a lot of cost. So at the AGM, one of the representatives mentioned the fact that the savings that they're going to derive from, just getting rid of that Cayman structure, that intermediate structure, is about $350,000 US each year. So while the company itself would have some new costs, it probably wouldn't be as high or heavy as with the Cayman structure. And one part of that whole deal is that MPC's parent company, which has a stake in the Cayman fund, will be issuing new shares to compensate them for, part of that transfer of assets. So it's better for shareholders on the perspective that, hey, can see the assets better, can value things better, can see the direct value of what this underlying renewable energy business is. Because to just value an asset by fair value, profit or loss, once a year at audit time or end of Q4, you really can't judge what this business is really performing apart from the metrics they give in terms of revenue and EBITDA and what they're doing in terms of budget. So the documents have been put in escrow right now. They're written on the TTSEC, Trinidad and Tobago Securities and Exchange Commission, to actually, approve the additional listing of shares to be given to it, MPC Capital's intermediary company, to be listed on the TTSEC and JSE intern, get listed on both markets. And once that is done, the documents will be released and the assets can be transferred effectively at that point to the listed company. So
is there a timeline on those listings for the TTSC and the JSC?
Boy, Kalila, the TTSEC is a real drag. That's the best way to describe it. So the intention that they're a better regulator, but the regulator takes very long. So they said at AGM they're looking for Q3 potential end of year, but TTSEC is pretty long. So while they might say Q3, Q4, we have to just wait until we hear the TTSEC put a notice out that, hey, we approve it, can issue new shares, and we can move on. Because according to the original timelines, this deal or reorganization should have been finished by May 2024. But because it's in several jurisdictions, El Salvador, Jamaica, so many different jurisdictions, it took much longer. So we reached a final stage now to it in the TTSEC. So that's really the last hurdle at this point.
Well, as you said, it's going to benefit shareholders greatly. So we await those updates. Thank you so much, David.
Wait, Kalila, just one last discussion. No, everybody keeps glossing it over because the company is so relatively insignificant on the JSE. EquityLine, Kalila, I think I sent you the news last week. Well, I sent you the news on a prior Friday, where the company was suspended again by the JSE and is planning to wind itself up.
Right, you did send that to me.
Yeah, so just to give some quick synopsis to the shareholders or the persons that are watching, EquityLine, for a very simple perspective, they are a company that would buy mortgages in the Canadian market. Those mortgages provide a particular amount of income. That income is used to cover expenses and pay its preference shareholders. So EquityLine would have come to the JSE back in 2018, 2019, let's say back in February 2019, got about $5 million US in capital through issuing its preference shares. The preference shares were supposed to mature January 2024. It was switched back to June 2024. They got suspended, published audited financials, got me back to trading. And then on the new JSE release says that their auditor, Grant Thornton LLP in Canada, has asked to withdraw their audited report, which effectively means that the company could no longer have published audited financials on the JSE, which causes no working suspension. So with the company now being wound up, it's going to be a potentially long drawn out situation now, because preference shareholders would have been getting 16 cents US every year in dividends, maturity price of $2, so it's about 80 cents over the period. And unfortunately now the company is planning to be wound up. However, the company is in a situation of an accumulated deficit. What do I mean by that? So we all know the typical equation is assets minus liabilities equal equity. However, assets have to be greater than liabilities to have equity. In the case of EquityLine, they have $47 million Canadian in assets, but 53 million in liabilities. So they have a 5.98 million Canadian dollar deficit. And with that deficit right there, that means that somebody's, in this case, potentially preference shareholders, are going to have to bite part of the bullet in terms of, who's going to compensate it appropriately. And they're not just the Jamaican preference shareholders alone. There are also Series B and F preference shareholders based in the United States and Canada. So while those markets are a little more advanced in terms of resolving different disputes or conflicts, just the fact that you have Jamaica, US, Canada, all in this mix, there has been a legal claim brought against an affiliate of EquityLine, which is raised by the trying to wind the company up, means that this is probably going to be quite a pretty drawn out process. And the company, was actually a startup in Kalila. This company was formed back in January 2018.
They were actually what?
A startup.
A startup. Okay.
Yeah, so it's formed in January 2018, went to the JSE by November 2018 to raise capital via preference shares, listed in February 2019, and got suspended in June 2024, suspended again in July 2024, and now winding up. So that's to kind of give some perspective. Kalila company, would have come to the JSC capital to grow. They initially would have wanted to raise $20 million US to the issuance of 10 million Series A redeemable preference shares. They're only able to issue 2.6 million preference shares, which was just above the 2.5 million preference shares needed for the offer to have be deemed successful. And the irony is, Sagicor's managed funds, the pool funds and unit trusts, they own 1.76 million out of the 2.6 million preference shares, which is about 2/3. So they would have, saved this offer in a sense from failing back then, and now the company is winding up, and it's not like the company has any available equity to, make shareholders comfortable that, hey, something needs to be fully recovered. In this case, we don't know what potential haircut shareholders preference shareholders are going to have to face in this whole dilemma. So,
but it's not a heavily traded stock, though, is it?
It isn't. So in most cases, as I pointed out, Sagicor's managed funds own 2/3 of the preference shares stock, right? And the remainder that was left behind was held by what you'd call your high net worth investors. For them, just buy, collect dividends, maturity comes, your money back, put it into another investment. So it wasn't an actively traded stock. But technically speaking, even though they got the 80 cents over the last couple of years in dividends, we don't know what is going to be the price that they're going to be paid out at when the company is wound up, because they're going to be fees payable to a receiver. There are going to be legal fees and so forth. So by the time they actually get to paying the preference shareholders, they might probably get back $1.50 on the dollar, which means $1 to be repaid back to them versus the $2 they had invested.
And it just goes to show the risk involved in investing in a startup company, any startup. Those first 5
In
years are
general,
difficult.
Khalila, I would not specifically just highlight as a startup company alone for risk, but any investment. So Nikon Energy Limited has taken a lot of work, local institutions and Trinity institutions for a ride. And it's quite unfortunate because we've seen JMMB, VM Group, we've seen Republic, we've seen so many different publicly known and relatively member-owned institutions, both in Jamaica and Trinidad, that have had to do massive write-downs because of Nikon's, current, bank. Well, I should call it. What's it called again? Not bankrupt. Well, not bankrupt, but insolvent status. So these persons back in 2019, 11% US dollar yield for 1 year looked amazing, but now it looks like a foolish decision. So EquityLine is a hard reality for some high net worth persons, but isolated towards just startups alone. Every investment carries risk because most people bought Nikon bonds, and most people think bonds are risk free, but Nikon still went under, and Nikon effectively, would have gotten some level of startup capital in the same time as EquityLine. 2019, they got a good chunk of money to its operation started, had an explosion in April 2022, in April 2021, got turned off in August 2023, insolvent by May 2024. So similar situation, domestic Caribbean-based company, and as I mentioned, some of these company names already. Then you have a Proven, a Jane mutual funds or other unit trust or managed funds that actually own Nikon investment instruments, which are now been written down. So it is going to show and a serious point that any investment can become a big winner for you, and any investment can become a massive loser for you. So the investment is risk-free. Even with the amount of research you might do, it's for you to really and truly just do your best to try and judge what risk exists in the market and what risk tolerance you have as an investor as well. So this is just perspective I'm just adding right now with all being said.
Wow, it's a tough situation. Very tough all around. But thank you for that perspective, David. We always appreciate you.
You're welcome, Khalila.
Coming through with the money news. So that's it for the analysts this evening. Let's take our final break and come back with our closing.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
I see you waiting for me. You're in my reach, but I have to have a little extra push to get close to you. Are you flirting with me? You want me to come get you, but you won't fall into my lap. You want me to show you that I want you. You want me to be responsible and proactive. Okay, you, I'm coming.
Welcome back, and that brings us to the end of this week's show. Thank you once again for tuning in on this Independence Day. Enjoy the rest of your Independence evening. I hope all is well with you and the family, and that you have an amazing rest of the year ahead. Can you believe we're already halfway through the summer? So time to get those cool books ready. Get the school fees money out, because I hope you didn't spend it on independence celebrations and activities and parties and all these things, because September morning is right around the corner. A special thank you this evening to Dr. Marlene Street Forrest, our main guest. Thank you as well to our analysts, David Rose and Clive Charlton. Thank you to you for tuning in yet another week. I want to remind you to like this video, guys. subscribe to the channel and share with a friend, because you know we like to get this money together. Don't keep the secret to yourself. Let other people know that we are here to make money. We are here to look at the markets every week, to look at the performance, to see what's going well, what needs improvement, and why. And we are here to study the business leaders, to ask them about their companies, about their businesses, and what their plans are for growth and what opportunities there are for all of us within the market. Now, remember as well that the Money Dictionary is now available for download. Just go to themoneydictionary.com and you can get that in your inbox for free. It has 66 definitions, I believe, commonly explained in common language for those words that you might be wondering about. If you're new to investing, if you're new to this world, and you hear about IPOs, you hear about bonds, you hear about stocks, but you just want a breakdown of what it is. If you hear about things like options trading and all these terms that come up when we are having discussions in the show, just keep it handy as your little pocket guide. You can search it. It's a PDF document. If you're looking for a particular word, it's also in alphabetical order. So it is a great resource for you to have. Also, I want to remind you to turn on those post notifications so that you can be the first to know when everything is dropping. We have quite a few features coming up within the next couple of months. We have a series coming up with the Company's Office of Jamaica. We have some stuff coming up with DBJ. We have, like I said, a lot going on, and a couple other IPOs on the horizon that we have heard about so far. So definitely stay tuned and make sure that you are in the know for breaking money news by subscribing to the newsletter at KalilaReynolds.com/newsletter. Now follow me on Instagram, TikTok, and all over social media at Kalila Ray. Just a reminder, that is my only handle. I will not ever DM you asking you to invest with me in stocks or in crypto or in anything else. I do not use Telegram. I do not use WhatsApp for business purposes. And if somebody has DM'd you, that is not me. Just report that page, because that is a scammer. That is somebody impersonating me to thief your money. Don't fall for it. Now, if you want to connect with the analysts this week, make sure you can find their contact information in the description box below. And you can also visit the website, KalilaReynolds.com, for information you can use. You can watch this video, you can read the transcript, read our articles, or you can listen to the podcast on all podcasting platforms. Now, tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. See you next week.